Welcome to Trade Finance Talks, a podcast from Trade Finance Global. During this series, we'll be hearing from global experts, as well as learning about the latest trends, technology and insights in the world of international trade and receivables finance. Episode 5.
I'm Mark Abrams, Head of Trade at Trade Finance Global. The trade and supply chain finance sector has changed dramatically since 2008. A combination of new technology and a need to comply with more stringent regulation has led to a fundamental change in the role of banks, as well as how trade finance solutions are delivered. Within the current macroeconomic and geopolitical climate, there are significant opportunities to enhance Anglo-Chinese relations. Brexit and the China-US trade war have fundamentally changed the chessboard. The $1.5 trillion trade finance gap needs to be addressed, taking into account the effects of digitalization and innovation around structuring finance for international trade. With that in mind, Trade Finance Global, in partnership with Eastern Partners, the ICC United Kingdom, and Coriolis Technologies, have put together a white paper on the state of the global supply chain finance market, focusing on the UK and China trade corridors. We're delighted to be joined by all contributors to the white paper: Simon Klein, Europe Business Lead for Eastern Partners, a specialist business banking insights and analytics consulting firm, as well as Dr. Rebecca Harding, international economist and CEO of Coriolis Technologies, a business providing data as a service to the trade finance sector. We have mapped some of the pain points and areas that require development in trade and supply chain finance so that we can look to resolve these issues as we transition towards a more inclusive system that works for everyone. Rebecca, Simon, thanks for joining us here today. In 30 seconds or so, please give us a quick background of yourselves and your companies. Simon.
Eastern Partners, we're a specialist business banking insights analytics firm. What we do is conduct research, or more precisely, voice of the customer research with businesses from everything from 1 million turnover annually through to 100. So your FTSE 250s, your Fortune 500 companies, in their use of business banking services and products. And that gives us a very, very clear insight in terms of what customers want, what their pain points are, and what their demands for the future are.
So I'm a trade economist. I've been a trade economist for a long time. And after a long time of realising that the data wasn't good enough to make business decisions, I set up Coriolis Technologies to become the data provider to the trade finance sector. So we cover trade finance, and we cover company data as well, with a view to providing an end-to-end risk solution.
Let's jump straight into the white paper. Simon, let's talk about cross-border supply chain finance. Asian markets dominate when it comes to cross-border sales orders, with UK closely following. Why is this so, and what are the big trends in terms of financing of this trade for corporates?
The situation with Asia is it's dominated by its makeup, and within that, it's the predominance of China. And the demand that the countries in Asia, particularly Southeast Asia, they're very dependent upon their imports. So, for example, with Hong Kong and Singapore, 90% of their supply chains come through imports. That then in itself has created a somewhat kind of unique demand in terms of supply chain funding in that region, where we've seen some of the most innovative and dynamic use of supply chain financing. When you look at the UK, and the UK is quite equivalent to Germany, about 70% of imports is what is driving that. You then see a much more traditional makeup. You've got your more established traditional trade finance. It's letters of credit, term credit lines, and that's how corporates really go. What we've seen in Asia, we're starting to see more elsewhere in the world, and particularly in Europe, with the use of off-balance sheet funding. And that's really a growing trend now.
Taking a closer look into the UK and European market, working capital finance is hugely important for supply chains. Is there a struggle for corporates and their suppliers having access to supply chain finance? And what is the role of technology and fintech in all of this?
Yes, as just mentioned just now, we see a much more traditional landscape. And within that, the availability of working capital finance is clearly there. And that's primarily due to its availability, along with traditional trade finance means. Within that, though, there is an increasing move to more off-balance sheet supply chain financing. And I think one of the areas for that is where suppliers are looking to increase their supply chain lines. Having said that, when you're looking at large corporates, even where they do put supply chain funding in place, their financial providers, in most cases banks, tend to only finance those suppliers coming from the top end of town. So again, kind of medium and small business tends to lose out. And what we see in wider work we've done beyond this work here, but when we talk to businesses, particularly businesses in the 1 to 100 million turnover range, more than half of those are actually desperately looking for finance to enable their trade. So there really is that unmet demand yet. I think one of the key things that comes through in supply chain financing is the new entrants coming into the market and those who are using technology, many is described as fintechs, where they're looking to provide that facilitation role of bringing together suppliers with financiers and enabling that financing to take place through technology, matching up and overcoming some of the traditional barriers that have existed.
The ICC Banking Commission's annual meeting, which is being held in Beijing this week. So let's talk about the China-UK trade partnership. It's clear that we're no longer in the golden era of trade. But Rebecca, you mentioned the importance of this partnership. What does the data tell us?
I think it's very clear that trade is still a major driver of economic growth, and it's terribly important to the UK in the situation that it's in at the moment, that it trades both within Europe and outside of Europe. And China is a very big trading partner for the UK, but actually China exports to the UK something around $50 billion worth of trade a year. So it's a very big market. Now, I think between the two countries, both of those trade flows have been growing. So China has been importing more progressively, and the UK, particularly in some of its key sectors like aerospace and cars and pharmaceuticals, has been exporting more to China. So the time when trade is under the cosh in some way because of increasing bilateralism, the breakdown of some of the trade relations that we're seeing around the world, these are two countries that are committed to multilateralism and committed to maintaining a rules-based international order. So it's very important that these relationships are sustained.
The story for supply chain finance from Chinese corporates is very different from the West. What are we seeing in the market in relation to how Chinese businesses are being provided supply chain finance, and why do you think this is so?
It's very much essentially coloured by the fact of the dominance of the Chinese banks. 75% of the financing is coming from Chinese banks currently, 16% from offshore banks, but that's very much been the key factor. That said, we're starting to see changes in that. And in the coming year, during the course of 2019, we're expecting to see the dominance of those Chinese banks reduced by about 11% overall. When we look at domestic Chinese banks, it's going to be far more. They're going to see maybe a decline in about a third of their share. And international banks, offshore banks, are certainly going to see an increase in excess of 10%. So there is those shifts taking place. I think it comes down to, and some of the points Rebecca was making just now, where we are seeing much more globalization taking place, the Chinese becoming much more outward and looking at how they work as global players rather than just as Chinese. So their openness is there, and there's points we can make later on in this interview about how that is developing.
Rebecca, you mentioned in the white paper that the UK's fintech sector offers huge opportunities for innovation in trade finance. Trade between the UK and China presents significant opportunities for both markets when you look at the facts. With an estimated $77 billion as a trade finance market for goods and services flowing in this trade corridor, most of which is currently being done on open account terms, several opportunities exist around trade financing, technology, and also partnerships. How can technology and partnerships help to accelerate the UK-China trade corridor and help bridge this $1.5 trillion trade finance gap?
So I think it's fair to say that this is one of the most exciting areas of trade at the moment. So we don't know how big digital trade is. We don't really know how big service sector trade is between any countries in the world because they're just not measured properly. So this is a huge area for exploration, which makes it exciting in and for itself. If we say that, just based on the data that we have at the moment, the service sector is growing at an annualised rate of 7%, but the service sector trade between China and the UK is growing at an annualised rate of 7%, which means that actually there is a huge amount of momentum behind what's developing. Now, how can that then link to helping small businesses? Well, if you look at the way in which small businesses trade and look at the way in which small businesses want to take risk onto their balance sheets or the way in which they just want to finance their activities, it's on a very short-term basis, and working within supply chains is a very good way of doing that because they get some security. Now, having supply chain finance on one platform is an easy way of doing it. That's one of the technological solutions that some of the bigger banks are beginning to address. But then the other way, and I think this is exciting from a Chinese perspective, is that some of the distribution companies are beginning to actually contest quite aggressively in this sector as well. So you've got logistics companies and supply chain companies beginning to say, well, we can provide short-term receivables finance on the basis of knowing that something is going from A to B on a supply chain basis. And it takes out the middleman in some senses. So that is an area where bigger banks are really having to work with the fintech sector not to be disintermediated by the logistics companies, actually, which are banks and don't have the level of regulatory approval and don't have necessarily, they do have liquidity, but they don't have that big sort of understanding of finance. So this is where you're getting a lot of competition and a lot of fintechs beginning to come in around AML, KYC and KYT, know your transaction, in order to be able to address this market, and it's growing very quickly.
Thanks, Rebecca. Let's talk about Brexit. I mentioned that significant opportunities face UK companies, particularly with respect to China's Belt and Road Initiative, as well as the UK's departure from the EU. Simon, what are China's business leaders talking about with regards to opportunities and also challenges around Brexit?
We interviewed 91 of China's top 100 corporates last September in their kind of current uses of supply chain financing, how they were organising their supply chains. And dare I say it, we asked the Brexit question. And what was really interesting was that 3/4 of those China corporates we talked to, and that's the top 100, said that they saw it as an opportunity to look at supply chain opportunities coming out of the UK. I think it plays back to the point Rebecca made just now about increasing imports coming from the UK into China. It's something they're actually proactively looking at. What was then even more surprising, when it goes back to your earlier question in terms of how the financing is changing in China, is that of those 3/4, just over 70% of those said they would look at a domestic finance provider from the UK for that supply chain. So the Chinese are becoming more global in that way. And for them, I think in the way as many UK businesses do, and it's something we see in the rest of our work, where there's been a high level of bullish optimism towards Brexit. Companies are preparing for it in many ways. They're looking at the opportunities beyond the EU. Yes, there's huge risk with that. There's risks of FX volatility. But I think on both sides, people are seeing the opportunities as much as they are the threats.
And just to finish off, I guess, what is the big issue that we're seeing or thinking around for Chinese corporates? What are you seeing, Simon?
What came out for us in the work we've done with Chinese corporates last year is when we look at external factors, in terms of their supply chain financing, probably the biggest external factor for them is compliance. More than half of Chinese top 100 corporates saw that as a key issue for them.
And Rebecca, does that match with your thinking?
Well, I think compliance has become a huge issue globally, and that's not recently. That's been growing over the last 10 years since the financial crisis. I mean, compliance has been the one thing that's been holding back the sector as a whole in trade finance generally. And there are a lot of technological solutions to that. I think the problem that everyone faces now is that the compliance issue is becoming politicised. So we're beginning to see the emergence of compliance criteria which are associated, for example, with US foreign policy. So Iran, China, Russia, it's beginning to get more difficult, more challenging. And that obviously affects small businesses, and it also affects new entrants into the market like the Chinese. So it's going to become a tighter and more complex issue in the coming year.
Rebecca, we've been looking at Chinese data, and it looks like there's a slowdown overall. But how does that actually impact what's going on in the economy? And what are your thoughts, especially around the Belt and Road? Can you just give some insights?
Sure. I think the interesting thing about China is that we've become very used to it being an export-led growth economic model. So we've become very used to China being an exporter, China importing vast amounts of raw materials. And actually, what China is trying to do is achieve a middle income status. And that means it's becoming more reliant on consumer demand, less reliant on demand for sort of, if you like, emerging economy things like commodities. and shunting its supply chains out across the region and through Belt and Road Initiative right into Europe, as we've seen recently with Italy signing up to Belt and Road as well. So in terms of what China is doing, it's actually exporting its economic model across the region. And that means that there's a huge potential for a debt crisis because it's spending a lot of money doing all of that. But on the other hand, if we all engage with it, it also offers the world a huge amount of opportunity in areas that are actually relatively underdeveloped at the moment. So that's one thing. And the other thing that's really interesting is that the impact of trade wars is actually being felt in the region as well. So there's been this kind of uncertainty around what's going to happen as a result of the US-China trade, let's call it dispute at the moment. And we might see a resolution to that. But what's happened in any case is that you're beginning to see some of the higher value supply chains moving to places like Vietnam, moving to Malaysia. You're seeing bigger exports of things like electronics from those countries, very fast growing and fast growing back into China as well, feeding the demand side. So actually we are seeing some signs of an emerging demand in China, but actually from around China rather than from just within. Interesting times.
Interesting times indeed. Well, that brings us to the end of today's podcast. It seems that while there are many challenges in the current global environment for trade, there is certainly a case for opportunities around innovation and technology within trade, especially between the UK and China. Thank you very much for your insights, Rebecca and Simon, and for joining us today. Rebecca, we look forward to hearing you at Beijing's ICC annual meeting this week. To read about the key findings, data points, and overview on the global supply chain finance market, head over to tradefinanceglobal.com to view the free white paper.
Thanks for listening to Trade Finance Talks. Be sure to subscribe to our podcasts at tradefinanceglobal.com.